Hey guys, welcome back. Hope you had a good day in the market. Thursday, March 11th. Still riding this GME squeeze. If you watched yesterday's video, I mentioned kind of what my thesis was going forward with GME. There's a couple things I didn't understand when I made that, but let's go over real quick. So when it was coming up here, I basically drew that trend line. I thought it's not going to continue on this. It's either going to go faster up or slow down and consolidate. It kind of did both for a bit. It went really fast up. Then we had that short ladder attack yesterday. And even yesterday, I was saying how it's actually consolidated yesterday. It's a huge range, but it's still getting a consolidation. So today you're just seeing the actual consolidation, which I kind of thought we would. But what I wasn't aware of is, so yesterday, once it dropped 10%, I looked into short seller restriction on the SEC. And so basically once it drops 10% in a day from yesterday's open, so, or close rather. So once it closes here, if it drops 10% from there during the business or the trading hours, then it's on a short seller restriction list for from when it dropped 10% all the way until close of the next trading day. And what that means is basically it, to sell it short, you can't sell it short on the red candles or when it's going down. The only time you can sell short is on upticks or green candles, which to me it should always be that way because it should be illegal to do these ladder attacks. It basically inhibits them from doing ladder attacks, from doing this, from simulating this market crash on no news and pretty much no volume. So they can't do this. They can't do it. They couldn't do it after they did this yesterday. They couldn't do it anymore until close today, Thursday, because it starts right once they trigger that. It started. And then I was looking into it more, and I didn't realize you could actually stack them. So basically, if it comes down 10% even today, when it's already on the short seller restriction list, dude, why did the charts go so slow when I start recording? If it comes down 10%, see what the world, I didn't go over there. If it comes down 10% this day from the close, then it's on the list for the rest of the day, which it already was, and the next day. Once I learned that, and I had some DD I read and looked up, and it seems like some big hedge funds or institutional traders, basically bigger money, is trying to help out or is going long on GME. So kind of a battle between the shorts and the longs. Not really retail. I'm just kind of holding the stock. I like the stock. But what they wanted to do, and what I thought they wanted to do, and it actually, I think it's what they did. They wanted to get it on the short seller restriction list for tomorrow also. So today, and I was tweeting about it this morning once I was like just finished reading all this stuff. I was like, all right, so I think I know what they're gonna do. It closed, where was it, right around here, 265 yesterday. It came down over 10% pre-market, but that actually won't trigger. It's got to be during market hours. And there's some argument about this, if it has to be during market hours or not. I believe it does. Some people say it can be anytime. But from what I read, I think it has to be during market hours that it's triggered. So basically it opened up here, it was down like 6%, and it came up and it was up 6%, and then it was like fighting, and then right about here I think was down 10%. And I tweeted about it and I said if this thing drops 10%, I think it's from hedge funds that are long on it and they're trying to get on the short seller restriction list, and I'm going to be scaling in at that point. So you can see right here, doing way more DD than I can to do, than I care. I should have said to care, not can, to do on GME and short sell restriction. Basically price drops 10% today, and it looks like it might happen in first few minutes. That might be best price point for a whole day or even week to go long. It would also put us on SSR for Friday. So that's kind of what I was thinking. If it drops 10%, it's not going to be on the, they're not going to be able to short ladder attack it. So that might be the cheapest price it'll be for the next 2 days. So here in GME, so then it did drop. Why it's down 10% is because the big money that's long on it is trying to keep it on the short seller restriction list. Kind of what I already explained. So yeah, basically it dropped 10%, and I bought 10 more shares on our TD account. on this one. Now I've got 20 shares. It was an average up for me, but I wanted more exposure, and I thought that was probably the best price point I'll get this week and potentially next week also. So yeah, that's kind of the short sell restriction and how that works. So basically we're on short seller restriction for the rest of the day today, which is 5 minutes, and then also tomorrow. And you remember when I was saying we're not going to keep this rate of growth, it's going to consolidate, it's going to run. This is the consolidation. It's happening partially. I think that being on the SSR list is causing it because the shorts can only do it a little bit on uptick. So they're basically keeping it really flat. This whole uptime through here, bunch of FOMO, people are getting excited. And then they're like, they've been saving up all their short shares that they borrowed because they have 3 days from when they borrowed a share to actually use the short. And they just hit it right here hard and trying to scare out much as they can. Bounces up, and then they're on the list. No more shortings, or basically on down ticks. They can't short ladder attack. All they can do at this point is hold it. Once it dropped 10% this day, now they're on it for this day also, which is Friday. So then the best play is just trying to keep it kind of in the tightest range they can. Trying to keep it down, but only so much they can do. The less active it looks, the less appealing it is to retail. So I think that's kind of what's happening here. It's consolidating. It's consolidating tight, which is nice, and it might continue to do this. So tomorrow, I guess I'm kind of expecting it to continue to consolidate. We're not going to get short ladder attacks tomorrow because they're on the SSR. It might run up. I'm not sure on them having to cover all the in the money calls. There could be exercise. I don't know if they'll start doing that tomorrow or Monday, Tuesday. So that's where I'm not too certain. If they have to start covering all the calls that are in the money, then this will for sure shoot up tomorrow at some point, either end of day, middle of the day, whole day. I don't know. Or it could just stay flat like this, I think, and continue to consolidate, which to me, I'd actually prefer this. It just consolidates tight. If it runs up, that's good though too, because then more calls from this week will expire in the money, pushing more of a gamma squeeze. But with the consolidation, why it's good is just for the option contracts. And 1 or 2 days isn't going to do a whole lot on the IV, but once you get a few days, the IV will start to drop down. However, I don't think next week is going to be flat in consolidation. I hope it does, but I don't think it will. I think Monday, Tuesday will probably run up quite a bit because covering the options in the money, and then maybe, I don't know, maybe the squeeze will start just after that they're covering that. So next week might be it. Hard to know. Everyone's saying the 19th. I don't know if the 19th they're saying it's starting, it's ending, it's at the peak. But yeah, we'll see with next week. I think Monday, Tuesday, this is a nice little sell-off into the close. Wow. Interesting. Let's see how it's much more organic. It's coming down, it's bouncing. It's not violent. You know, there were some sellers, but then they'd have to buy and then they could sell. This is the 1 minute chart. So yeah, so for tomorrow, here's the option chart. If you guys have E-Trade, it's on other platforms too, I think. But I'm looking at the 600 call expiring next Friday. So this just kind of shows the price of where it was and the range it was in. And so you can see when we had that huge dip yesterday, that short ladder attack, it was halted. So you really couldn't even probably gotten filled down here. But if you were really good, best you could have done was probably 1500 on this call. And then it shot back up. The high here was 2500. And then it's kind of trading this range. But just from the Theta decay and just how it consolidates, it's losing value. You see how this thing's lost value? And right now this thing's worth 1400. So it's back down almost where it did when it crashed, even though the stock price is higher. See how that works? So that was down here, 189. Stock price is all the way up at 250, but the option's almost worth the same amount. That is time decay on options contracts, and that's why when there's high implied volatility, you don't want to be buying them necessarily. you want to be selling premium. I guess, I mean, you can do debit spreads too. I guess that's buying it, but yeah. So that's why for me, I want it to consolidate tight, and this premium will just drop down if there's not sentiment, because it'll get tight. It'll get a tight range. And today was a nice tight range. And this is also good just even on a technical analysis standpoint. This is a nice floor it's building right here, and stability. I mean, that's what you want. It runs up, it consolidates, makes a level, and then it'll keep going. It's still bullish. If you look at it without the extended hours on, you can see, I mean, it's kind of like a bull flag. Not crazy, but could be kind of a bull flag. But at any rate, it's consolidating above this 240. Really nice, a nice floor, and it's consolidating tight. So this looks good to me on a red day or not. I think it's nice. Not saying tomorrow is gonna go crazy. Like I said, tomorrow could be a consolidation day also. I'm trying to get exposure for next week, and I already have some. I mean, we've got like 40k in exposure for next week if it closes above like 600 something. I'd like to get some naked stuff also. Next week rolls around, if it stays pretty flat for a while, I'll try and get exposure for the week after. Kind of playing it week by week and trying to have plays pay for themselves. So if we have a good run up and one's worth a lot, I'll sell some out and do that. But the shares, I mean, the shares are pretty good. Now that this thing is up and the IV on the contracts are all relatively, they're very high. I mean, they can go a lot higher, but now that the IV is so high, to make a killing on options where you see, you know, 15,000, 20,000%, that's only going to happen if this thing goes to 1,000 a share really quick. I mean, not technically that, I don't know where, but it has to go up a lot. If you look at further back on this 600 strike, you can see really where you get those huge gains are when it's flat all along here. And that's when I made the good money on GME. It was actually this bump. It wasn't on this call specifically, but it was when it was flat for like 3 weeks, almost a month between the last gamma squeeze and where we just jumped up like a week ago. So it was in this range for a long time, real low and slowly just losing value. See right here, this is right here. So these contracts, this 600 call for Friday, it was worth 42 cents, so $42 for one of them. Had that bump up and worth 1100 there. Came back down, 400 here, and then the other day when we almost hit 350, it was worth 3,900. And then now look at this thing, sold off pretty heavy. It's basically as low as you'll get it on the drop. So buying shares is one thing on these dips. Buying contracts, like, yeah, you might get a better price. It depends on what's happening after. If this thing just shot up and went to the moon at this point, then yeah, it typically doesn't do that though. If you follow stocks a lot, there's a heavy drop down. The bigger and farther and faster it falls, the longer it's going to take for it to recover. It'll usually, you know, consolidate before it can run again. So basically with the options, you can say, okay, this IV is going to be getting crushed, so it's going to be getting cheaper, these calls. Man, that's quite the options lesson. Anyways, so yeah, GME looks good for me. I got shares on that dip because I figured the IV or the contracts weren't going to be super cheap. And the account on this one actually today is looking good. We're up $28. I think we're up more than that. But that's mostly because our other swing trades are up. Tilray, NBY, FRSX, SFTW, HOL, those are all up. And let's see, this one. No, this one over here. So here's our E-Trade. On these debit spreads, it's kind of hard to tell what's going on just because there's a spread between the call on the one you bought and the one you sold. So until you really have some price action, these kind of swing back and forth. It'll be up 100%, down 15%, so you can't really see what's going on. I did sell out of some stuff today. Those SPY credit spreads, I just let them expire worthless. That was actually kind of a bad one. We lost like, I think 1100 on that credit spread. The market trades out of its organic natural pattern when you have an exterior event come in, and in this case I think it was the stimulus, so the market traded unnaturally high when the range it should have been in my opinion, was more correction. But yep, can't predict that kind of stuff. So yeah, lost that one. Looks like it, yeah, just close it out for me. And then Corsair, I sold the close. Oh yeah, I sold the credit spread on Corsair. No, what I sell? Yeah, I sold a credit spread on Corsair. I just don't see it coming above my strikes on that one. It's weak right now. I still have some exposure to it. I sold our 100 shares of costs. I realized it was moving just with GameStop, and might as well have it in GameStop. And then today actually it was kind of diverging from GameStop. It was looking worse, so I was like, I'm just gonna get out of this thing. Sold our Beyond Meat play for pretty much nothing. Kind of just focused 100% on GameStop for the most part. Shares we have in here, they're all down from the last month of correction. We have this put credit spread on Tesla, which will be nice. I'll probably scale into it more on red days. Yeah, it's basically Tesla has to be over 700 by December, and I think it probably will be. So GME after hours, don't have to worry about that too much. It's basically a different market, and it doesn't really have much bearing on what's going on. Long term today looks good actually. Look at this. That's why I have a long term. We can lose it on the trades, but if you just let the long term sit, it does well. Square's up in here. Tesla's up in here. That's a big one. Very biotech companies up. IMMR's up. So that's nice. Nice to just have the long term, something you don't sell in. You just go in and buy. And follow us on Twitter at HappyMoneyYT. I was updating this again today. If it's pretty slow though, I'm not going to be updating like crazy. It could be, but I feel like that gets annoying when you're constantly getting updates. So I don't have much else to say. Thanks so much for watching, guys. Sub up, like up, comment down. Happy money sticks around. If you made it this far, put in SSR in the comments, so I know you stuck with it. SSR is an acronym for short seller restriction, and that's what we went over. And then what else? The options. We did all the option premium. Wow, a lot of lessons in this video. See you tomorrow, guys. Peace out.